This is our Forex blog for July 10th, 2014. Before I go into our currency indexes, which is in my opinion is the easiest way to trade, let me just showcase our Forex signals over the last 2 days. You can see yesterday nice sell here, sell, buy here, sell here, buy, buy. Actually, every single trade for the last 2 days worked in the euro. Here's the pound. Oftentimes a lot harder to trade than the euro. This trade found a big win. Medium-sized win, small loss here, pretty much 3 pip loss, small win, pretty much break even, small win, tiny loss. Here's the pound yen. Started last night, loss, small win, break even, small win, small win, big, huge win, medium win, break even. Pound yen's much harder due to the volatility. Here's the euro yen, small win, loss, break even, maybe 3 pip loss. It got short here at 49 and out down here, so it's over 60 pips, lost 4 pips, broke even unfortunately on this trade, broke even, maybe lost 3 or 4 pips, lost 3 or 4 pips. Forex signals are coming along very well. There's about 440 different patterns, and I'm spending most of my time now tightening up all the older patterns and making them super strict. Just like movie stars can pick any woman they want, when you have hundreds and hundreds of very high probability patterns, you can be super selective as well, and that's what I'm doing with the signals. Now, using the currency indexes is, in my opinion, the easiest way of trading, because basically you just look for a strong currency and you want to buy it versus a weak. The euro starts off above its hourly, comes up to the previous day's high right here, which was a pretty extended move, and it took it almost 12 to 14 hours to get back to that area. If it breaks above there, the euro is likely to be strong. If it fails here, it's likely to come down, and it's going to be confirmed with a downtrend once it breaks its hourly and 15-minute moving average in green. The dollar is trending down, and it pretty much found support at the previous day's low, and it's breaking above its hourly. The yen is also above its hourly, but it's also at the upper containment band, so it might pull back a little bit before going up. If you see the euro trying multiple times to get above the high and it can't, you can always draw a trend line on here, and when the market breaks the trend line, it's pretty likely to go lower, especially if it bounces off the trend line first. The more times it spends there, it can't go higher. When it does break down, if it does, and here you got a nice little double top in the euro. Right here at 6 o'clock, you can see it's very likely to go down. Now the dollar's up, and but it's near the upper containment band. This one's way above the upper band, and it might be too late to actually get into this trade. The best time to get into a market breaking out is, when it goes sideways for a couple hours and breaks out way back here at 2. Now the euro was strong at that time. The pound just got weak, so the pound yen is an excellent one to be selling back then at 2. Let's bring up any time frame chart, 5 minute, 3 minute, 15 minute, and you can see way back at 2, you're looking to sell this, and of course it goes down. If you miss the first sell, you have this nice little pullback, and you might have only made 5 to 15 pips on that trade. And then when you sold this nice 2-hour wedge pattern right here, this is what your risk would be right over the high. You put your stop, and you can see it kind of slowly went down and kind of went sideways, and you might have exited the trade somewhere down here, and you made 3 to 4 times more profit than what your risk is. If you sell the next pullback, your risk is this, and anytime it makes a nice big move like this, you control your fib targets on here. You already know ahead of time what your likely reward is going to be 70-80% of the time. Here's the high, here's the low, and look where it went, right to the 1.382 fib target. So you knew before you even pulled the trigger that you probably had a 60 to 70% chance of this trade working, and if it did work, you're going to make 4 to 5 times more profit than what your risk is. And that's the key to trading. Don't worry about winning percentage so much as look for trades that are going to give you many times more more in profit than what your risk is. Here, the Australian's pretty weak. And again, when it's underneath the lower containment band, a lot of times it's more likely to reverse than continue. Notice how many times it hits these things and then bounces. So ideally, you want to see a weak currency that's up near maybe the hourly moving average and going sideways. And it has a very good room to run to the downside. It's kind of risky selling a currency that's down this much. Even though it might be the weakest currency, it might be down statistically so much that there are buyers coming in. In this case, you can see the daily, weekly, monthly trend are all down. You can consider, in my opinion, selling a currency as long as it's above its white 2.0 lower band. So let's take a look at the Australian yen at 2. You can still consider selling this, although be very careful in this, and be very, very careful. So here's your stop, and you can see this one just kind of went. And I probably would have just exited this trade here thinking it's going to get some kind of a bounce. I would have been wrong, and I would have missed this extra move down, but I would have also, avoided a lot more risk. When you sell the extreme lows, your risk is a lot higher, and you can put the regular containment bands on the chart to see that. Let's put the containment bands with 1.5, put the DSP, which is a fast moving average, 2, and then we'll put some 3 bands on. Most of the time the 3 will contain price. And usually at the 3 level you're going to get some kind of a bounce. And you can see this was so weak that it did get some kind of a bounce off the 3 level, but very little, and then it continued down again, went sideways, continued down again. Now currency is down a lot, and when it comes outside the bands like this, it goes sideways. It goes 2 and kind of beyond the 3.0 band and then goes sideways, gets no bounce. It's very likely to continue down. So anytime after an hour and a half, 2 hours, you can really consider selling a currency like this. So here's the low. We'll look for it an hour and a half. There's an hour and a half. You could just simply draw your trend line underneath these lows and put your stop right here, and you have super, super tiny risk. This is very likely to go lower. You don't know how much lower, but again, most of the time when it's down a lot, the lower band is where it's going to stall. And you can also look at the 4-hour range projection tool, or the 1440, which shows you how much it moves per day. 1440 shows you how many pips it typically moves an entire day. And as you can see, it's way underneath a normal day's lower volatility. This is a normal day's low. This is a 1 standard deviation low. This is a 2 standard deviation low, which is about a 95% chance it's not going to go lower. And so I'd be very careful on this trade, and would want to get out at the first sign of any kind of as soon as it stops going down, get out immediately. You might make 15-20 pips on this trade. When markets are super weak, they can continue to go. But for new traders, you can also just simply trade our signals. Again, there's 440 different patterns that are in here, and the winning percentage, I'm working every day, pretty much 95% of every day, on improving the accuracy, adding new patterns that high probability trades that our existing signals missed, and also adding additional rules to the previous signals. I have pictures and notes on every single one of the 440 plus patterns, and so when they show up, I look at the picture, and if it doesn't resemble the initial trade, I'll consider adding extra rules to it. Or if it is a high probability trade that just seemed, for whatever reason didn't work today, I'll leave it alone. So that's it for today's Forex blog. Hope you enjoyed it, and I'll try to do at least one more this week, and we'll release a new version of our software with probably 50 new patterns and 150 different improvements in old patterns later this week, probably tomorrow.